morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. Thanks for joining us this early in the morning. If you're watching on Facebook, Twitter, or YouTube, like, comment, tell us what you're thinking, and share if you see what you like. First, let's look at the headlines. President Donald Trump says the US will withdraw from the Iran nuclear deal and calls it a defective deal at its core. Brent crude hits as high as $76 a barrel as supply concerns grip the market. Asian markets open lower as investors assess the implications of Trump's decisions to end the nuclear deal. Essar Steel's lenders give New Metal and ArcelorMittal an opportunity to clear all outstanding dues to become eligible bidders. That's a Bloomberg Quint exclusive. And higher volumes are expected to aid Eicher Motors in the fourth quarter. The numbers come out today. All right, on to the big story. President Donald Trump says the US will withdraw from the landmark 2015 deal to curb Iran's nuclear program. He says that he intends to reinstate financial sanctions on the country, a move that takes West Asia into a fresh chapter of uncertainty. Listen into what he said.
It is clear to me that we cannot prevent an Iranian nuclear bomb under the decaying and rotten structure of the current agreement. The Iran deal is defective at its core. If we do nothing, we know exactly what will happen. In just a short period of time, the world's leading state sponsor of terror will be on the cusp of acquiring the world's most dangerous weapons. Therefore, I am announcing today that the United States will withdraw from the Iran nuclear deal. In a few moments, I will sign a presidential memorandum to begin reinstating U.S. nuclear sanctions on the Iranian regime. We will be instituting the highest level of economic sanction. Any nation that helps Iran in its quest for nuclear weapons could also be strongly sanctioned by the United States. America will not be held hostage to nuclear blackmail.
All right, so how are the Democrats and Republicans in the U.S. reacting to the move? Joe Sobzik of Bloomberg News has this report.
Well, he criticized it, as he long has, as a one-sided deal, the benefits accruing primarily to Iran. But he did make several points that he said that were his reasons for jettisoning the deal. Number one, he said that it was, quote unquote, defective at its core because it didn't address Iranian ballistic missile development, nor its influence on many of the conflicts that are arising in the Middle East, and such as in Syria and in Yemen. And he also argued that it would allow, because some of the terms of it expire within a decade, it would allow Iran to continue its pursuit of a nuclear weapon, and that would trigger an arms race in the Middle East as other countries sort of prepare for that that eventuality. That said, he said that he hoped that these punishing sanctions that are being reinstated in 90 days would force Iran to come back to negotiations and perhaps get a better deal, at least from the U.S. standpoint, to address those issues.
Right, and we heard from the Iran president, Rouhani, also. He's saying that they can achieve the benefits of JCPOA with just the five, without the U.S. Is this deal still relevant without the U.S.? What's the response so far among Congress and the Republican Party?
Well, in Congress, the reaction split, as you might expect, largely along party lines. Democrats universally decried Trump's action as dangerous, impulsive, and the wrong strategy for the U.S. Republicans, for the most part, but not all, backed the president. They'd long been critical of the deal when it was negotiated under President Obama, and so they were universally applauding the president. There are a few notable exceptions. But the thing is that Congress, as it was when the agreement was first negotiated, is on the sidelines in this. They have, even if there were some sentiment to reverse course, there was not much that they could do to do so.
All right, stocks on Wall Street recovered from early declines to close flat. The Nasdaq managed to stay in the green just barely, closing about 6 points higher. The other two averages ended a couple of ticks, well, more or less flat. But Abigail Doolittle of Bloomberg News tells you what happened in that session.
Stocks finished basically unchanged in Tuesday's Wall Street session and mixed. This after a bit of a roller coaster day. Both the Dow and the Nasdaq finished ever so slightly higher. The S&P 500 fractionally lower. But at the lows, the S&P 500 had been down more than 0.6%. And that big dip happened after President Trump announced the U.S. will be exiting the Iran nuclear deal. So initially, stock investors not liking that news. Oil all over the map, too. At the lows ahead of that announcement, down 4%, at one point more than 4%, finishing down about 1.5%. But interestingly, energy stocks, those did very well on the day after that announcement. So a divergence between oil and energy stocks. The energy sector, the top for the S&P 500, up about 0.8%, helped by some of the big names, the E&P names, including Marathon Oil, Devon Energy, Hess, and many others. Now, the worst two sectors for the S&P 500 down sharply, both utilities and telecom. Those are rate-sensitive sectors with yields rising on the day. That was a drag for those two sectors, competing with their high dividends. And turning to one of the worst stocks, though, for the S&P 500, Comcast, down more than 5.5%. This on the news that the company may be considering making a bid for certain Fox assets. If so, Disney, of course, already has a $52 billion bid in there, so a bidding war could emerge. And Comcast shareholders seem not to like that, with those shares down sharply on the day. In New York, Abigail Doolittle, Bloomberg News.
Well, no overarching themes in Asia as of now. The early risers had opened mixed. The Nikkei was down. It's still down about 0.2%. The Australian benchmark was trading positive. It's still doing that. The Chinese markets have just about opened up, so it's too early to give you cues on that. But a few ticks in the red from what I can see. The Hang Seng, on the other hand, has opened positive. But we'll have to come back to those Asian markets because the ones in China and Hong Kong have just about opened up. So we'll have to see where they settle at in early trade. But what's at stake for global markets? Let's find out from Jayesh Khilnani, who joins in with the updates. Jayesh?
Morning, Alex. As Abigail put it, oil prices are absolutely all over the place. If you have a look at overnight prices, WTI declined as much as 4.3% before closing lower as well. Now, early Asian hours, oil prices have in fact spiked up to 2.5%. Now, this is on the back of the US withdrawing from the 2015 Iran deal. So what it essentially will do is that they will now curb the Iran nuclear program and in fact reinstate all the financial sanctions on Tehran. Also, we understand that the US has given its allies 180 days to remove themselves from any of the Iranian oil deals that they would have got into. And during the same period, the US will actually monitor how much of Iranian oil do they buy. So we'll have to wait and watch how the entire situation pans out. Many questions unanswered. How much of the sanctions will actually be imposed and how strict it will be. Those need to be clarified as well. But based on this, what is the analyst community thinking is that we have plenty of analyst reports suggesting that based on this deal, pulling out of this deal, oil prices could rally towards the $80 to $90 per barrel. As far as gold prices were concerned, they closed little changed on account of the dollar index, which actually is rallying for the fourth consecutive session. It was not a great session for the base metal space as the index on London Metal Exchange resumed trading and closed about 0.7% lower. We had aluminium and zinc, which managed to close positive on the London Metal Exchange, while other base metals like copper, nickel, lead and tin declined more than 1% each.
All right, thanks for that, Jayesh. Let's move on now to the trade setup for the day in India. Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. How's it looking?
See, at this point of time, the SGX Nifty is indicating a negative outlook, but it's marginal, just 16 points is something that we're seeing at this point of time. So 10,725 yesterday. from yesterday's close, it's down almost 16 points. So it seems stable, but we still have almost 2 hours to go, and a lot could change because crude is spiking up significantly. Now, as far as how did the ADRs pan out in trade, HDFC led the losses. It was down 2%. Wipro, Tata Motors and Vedanta were also weak in trade yesterday. The other ADRs, what managed to move up was ICICI Bank. Post the numbers, it did manage to react for the second day in a row. We're seeing the ICICI Bank ADR move up in trade. Jayesh already spoke about how crude is panning out in trade. There was a fall of almost 2.5% yesterday. That seems to be recovered. So we are close to the $77 barrel per mark on the Brent crude, and WTI is inching close to the $71 barrel per mark. Base metals, the LME was shut the day before, but yesterday it did manage to open. So negative cues coming in. Copper was down almost 1%. Nickel, lead, tin, all of them falling in trade. Even if you're looking at China currently, steel is trading down almost 1%. Copper is trading down by 0.7%, and aluminium is trading down by 0.5%, despite it moving up on the LME. Most of the precious metals are trading with a negative bias by almost 0.3%. How did the fund flows pan out in trade? FI sold in 97 crores. DIs bought in almost 923 crores. But on a month-to-date basis, whatever FIs have sold, it's the DIs that have been buying in the cash market. Now, as far as sectors are concerned, the Nifty managed to move up just 2 points. It was absolutely flat in trade, and all the 3 indexes, except for the small cap index, which managed to move up, the other indices were flat in trade. The banking stocks did well. Auto was down in trade. Media index was down 0.5% in trade, so they were not doing well. But the PSU banking index was up 1%. Real estate index was up 1%, and because of ICICI Bank, the Nifty Bank managed to move up close to 1% in trade. So that's the general trade setup. 2% up on the India Wix is something that we're seeing. So we are about the $14 bank mark. Mainly gains coming in only on account of ICICI Bank. Otherwise, Infosys, L&T and the HDFC twins registered negative growth for the Nifty. But Agam, what are you spotting?
Well, as you can see, Darshan, we were looking at consolidation yesterday's day of trade with very little change again when it comes to the futures open interest coming down to the Nifty Bank, which is largely led by ICICI Bank. That's where we saw another 14% addition towards open interest towards longs out there. Again, it's largely on account of the gains that we saw in Axis Bank and SBI, along with, of course, ICICI Bank. But the VIX moved up, and that remained at around 14. Now is a time when the traders can be a little cautious. But this is also expected because we are going into an event, a political event, that's the Karnataka elections. Coming down to the options and the way things have changed, we are witnessing more writing in the 10,500 put, and this is a continuation of trend that we've seen over the past couple of weeks, that base formation around this mark. Nothing much to speak for when it comes to the call side of things, the unwinding in the 10,900 call. But when it comes to stocks, we're keeping an eye on D1 Housing Finance. Expect restricted trade there as it moves into the F&O ban. And on the other hand, G1 Financial, well, it's seen a little bit of recovery, so we started to see some longs coming in, and we're also keeping an eye on SRF, which also moved up by as much as 3.7%, 13% added towards open interest. And among others, we are looking at more accumulation of shorts in PC Jeweler, where the stock tumbled yesterday by as much as nearly 16%, another 15% added in open interest. We'll have to wait and watch whether or not this one sees recovery, but it's very volatile. But once again, all eyes would remain on benchmark indices and the kind of impact crude can throw up when it comes to some of these larger companies.
All right, thanks so much for that, Agam. Let's move on to a Bloomberg Quint exclusive now. Lenders to Essar Steel have issued a direction to New Metal and ArcelorMittal, giving them a week's time to clear all outstanding dues, that is overdues, to be eligible to bid for the company under the insolvency process. Vishwanath Nair joins us on the phone line with all the details. Vishy, what are you picking up?
What we understand from banking sources as well as legal sources is that after a 24-hour voting cycle, the lenders have decided to issue these directions to New Metal as well as ArcelorMittal, asking them to clear any pending dues within the next 7 days. Essentially, overdues in the IBC context refers to any amount that has been pending on a certain date, as well as penal interest that may be charged by the respective lenders. Now, both these bidders will have to go around, get no due certificate from all of their lenders and repay them and get these no due certificates so that they can submit these no due certificate to SRC's lenders and then become eligible to bid for the company. But of course, the problems here are that in case of ArcelorMittal, they have to pay off all the dues that are there in the KSS Petron as well as Uttam Galva cases, considering they were promoters of both these companies. In New Metal's case, Revant Ruya is a minority shareholder through a trust, and therefore, whatever guarantees were issued by his father, Ravi Ruya, those need to be cleared according to the lenders. New Metal had earlier offered to buy out Revant Ruya's stake so that they can become eligible again to bid for Essar Steel, but lenders seem to have not given them that option. They're essentially saying that if for any change in the shareholding of a bidder, you need the permission of the resolution professional as well as the committee of creditors, and only then can you actually change the structure of a bidder. So that option is off the table as of now. They're saying that you clear all the dues. Both bidders can, of course, challenge this decision or these directions of the COC at the NCLT. But that is something that we will notice over the next couple of days. On the 17th of May, the National Company Law Appellate Tribunal is anyway hearing pleas by both these bidders where they are questioning each other's eligibility. So an order that will be passed on the 17th or on those hearings will have some bearing on the way the lenders decide on the entire insolvency process.
All right, thanks Vishy for that. We'll stay with this story over the course of the day, and of course over the next few days, as Vishy was saying, we'll stay on top of it and we'll bring you all the updates. But let's move on now to an IPO that's going to hit the streets today. Mumbai-based Indostar Capital Finance is headed to the primary markets. And if you don't know about this company, it's a non-banking financial company backed by the Everstone Group, and it's looking to raise 1,840 crore rupees through its public offer. Shraddha Babla is standing by to tell you everything that you need to know about this particular IPO. Shraddha?
All right, so I'm going to start off with the offer details as far as this IPO is concerned. Now, the price band has been fixed at 570 to 572. The offer size is about 1,844 at the upper price band, and that would imply a post-issue market capitalization of nearly 5,200 crores. Now, if you look at that 1,844 crores that will be raised from the IPO. 700 crores will be a fresh issue which will be used by the company to augment its capital base and to use it for future expansion purposes. 1,144 crores is offer for sale, out of which the promoter entity Indostar Capital is looking to raise about 1,058 crores. So the promoter shareholding will fall from 91.5% to 58.95% after the issue. Other shareholders are also going to be participating in the offer for sale. It's a Mumbai-based NBFC. A relatively newer company, started operations just in 2011 and backed by the Everstone Group. Now, with respect to the business profile, corporate lending is the biggest chunk of its portfolio. Their business started in 2011, hence a sizable 77% comes from there. SME lending is 22.7% of the portfolio. That was started in 2015, and just recently in September-October, the company has decided to foray into home and vehicle financing. So that's a very small part of the business right now, but that's the area that they're looking to grow. With respect to the financial picture, if you look at the compounded annual growth rate over FY13 to FY17 period, the credit exposure has grown by 30%, net interest income by 28%, and net profit by about 24%. So growth numbers look attractive right now. The gross NPA has continuously inched up year over year, and at the end of December 2018 stood at 1.7%, still a manageable level. Net interest margins at about 6.9%, so relatively steady margins over there. With respect to some of the return ratios, that seems slightly inferior, with a ROE of 10.9% and ROA of 3.8%. This is especially with a capital adequacy ratio of about 31%. It just suggests that the company is probably underutilizing its balance sheet and is cautious with respect to lending, and that these ratios will be diluted further on account of the fundraise. With respect to the peer comparison and valuation, Indostar Capital Finance at the upper price band will be asking for a price to book value ratio of 1.9. If you look at some of the SME lenders like Capital First, Shriram City Union and Mass Financial, they're trading at much higher valuations. Something like a Piramal Enterprises, which is more of a corporate lender, especially with a retail heavy lending portfolio, that also trades at a higher valuation. But having said that, these are not directly comparable peers because the portfolio is different. These three companies are actually more retail focused, whereas Indostar wants to foray into that area, but currently is more of a corporate lender. So at 1.9 times, most of the analysts believe that the valuations are reasonable. But when it comes to the brokerage verdict, it's mixed across brokerages. So you have Aditya Birla Capital, Angel Broking, IIFL and Hem Securities, which has recommended us subscribe to the issue. And on the other hand, you have the likes of ICICI Direct. If we move on, we will see some of the other names. So you have Antique, ICICI Direct and Choice Broking, which have actually asked to avoid subscribing to this IPO.
All right, thanks for that, Shraddha. We'll stay with this and bring you all the updates, of course, on that IPO and how it pans out. But Royal Enfield owner Eicher Motors will come out with its fourth quarter numbers today. And while sustained double-digit demand for the two-wheeler maker is expected to aid the numbers, the commercial vehicle division is also expected to have picked up pace. Yatin Mota filed this report on the numbers to watch out for.
We are expecting a healthy quarter for Eicher Motors. So on a consolidated basis, we are expecting revenues to grow by nearly 33%. Revenue seen at little over 2,500 crores. As far as EBITDA is concerned, we are expecting a 37% growth. Also, a similar growth could be seen for the profits, which are expected to be close to 630 crores on a consolidated basis. Also, we are looking at some margin expansion. So 80 to 100 basis point margin expansion is expected for Eicher Motors. The consolidated entity is expected to see the margins at a level of 31.8%. Of course, this time we had a good growth, 27% kind of a growth for the Royal Enfield end of the business, and higher volumes as well as better realizations in that segment will aid the overall performance for Eicher Motors. Also, if you look at the realizations, we are anticipating that the realizations could grow anywhere between 3 to 4% for the consolidated entity. Also, if you look at the margin trend, clearly they have remained about the 31%. So clearly that is one point we will be focusing on. Apart from that, we'll be also watching out for the management commentary on the new launches. How really is the Royal Enfield business doing in terms of the waiting period and demand, and also how do they see the commercial vehicle segment growing moving forward.
All right, Shraddha is back with the stocks that you have to watch out for on account of them being in the news. Shraddha, what's on your list today?
A couple of earnings, Alex. Strong numbers coming in from SKF India, where revenues grew by 8%, net profit by a strong 24%. Operationally, also the EBITDA jumped by about 34%, so you could see some positive reaction there. Syntex Industries is yet another one. While revenues saw a downtick of about 7%, the net profit was up 15%, and EBITDA margins also rose from 11.6% to 15%, so a good quarter there. Automotive Axles is another one. Revenues jumped by 30%, net profit by a much larger 56%, and EBITDA margins also expanded by nearly 200 basis points. On the other hand, you had a weak set of numbers coming in from ABB India. Revenues grew by 17%, net profit by 14%, and EBITDA margins remained flat at about 7.5%. Sun Pharma Advanced Research also saw a sharp fall of about 52% in the revenue growth number. The net profit reported was 2.5 crores, and this compares to a net loss of 32 crores in the previous quarter. But that is mainly on account of an exceptional gain of 49 crores during the quarter. Otherwise, it would have been a net loss, or probably a wider one. So we could see some weak reaction there. You also have Tata Steel Europe, which is said to be exploring potential sale of non-core operations. Watch out for that name. Also, a couple of bulk deals. Enkai Wheels is one company, an auto ancillary company. Now you have Blue Lotus Capital multi-bag of fund, which has bought 0.6% stake in a bulk deal yesterday. Another interesting one is Eveready Industries, where Amansa Holding has sold 1.3% stake. PNB Housing, of course, we knew yesterday that the Carlyle Arm Quality Investment Holdings was looking to offload some stake. So while they have sold 4.8% stake, The name of the buyer is what we know now. It's General Atlantic Singapore Fund. They bought about 1%. Remember, they're already existing shareholders and they held about 18.5% before this deal any which ways. Sri Renuka Sugar, where the promoter Khandepar Investments has sold 2.3% stake. So again, a lot of names where you could see some reactions today.
All right, thanks Shraddha for that. Let's move on now. Vijay Mallya has lost a lawsuit in the United Kingdom that was filed by Indian banks seeking to collect more than $1.5 billion amid allegations that he committed massive fraud. Bloomberg's Anthony Aarons tells you about that judgment.
The High Court judge dismissed Dr. Mallya's request to appeal. Now, that's a bit of a formality in UK courts. What that means now is Dr. Mallya has to go directly to the Court of Appeal and ask the Court of Appeal for permission to appeal. That'll take about 3 weeks. But in the meantime, he was not granted a stay of execution, which means the banks can immediately try to enforce the $1.5 billion in judgments that they have. So they can go and try to seize assets or whatever steps they want. One of the lawyers said afterwards they'll take any steps needed to go after the assets.
All right, and the judge apparently has also refused to overturn the global order that freezes Mallya's assets. Well, there's clearly lots to talk about today, starting with crude, of course, and international markets, geopolitical issues to mull over. You'll find all of that and more right here on Bloomberg Quint Live. But there are also several stories on the website bloombergquint.com that you can check out. First up, the government has continued to distance itself from the controversy surrounding loans given by ICICI Bank to the Videocon Group and allegations of nepotism against the bank's chief executive officer Chanda Kochar. Lok Ranjan, the government's nominee on the board of ICICI Bank, skipped the lender's board meet for the second consecutive day on Tuesday. And Indian Oil Corporation has not revised petrol and diesel prices since the 24th of April because it believes that the recent surge in crude oil prices are on account of geopolitical issues, well, particularly the one that we had yesterday, and will not permanently last. That's according to the chairman and managing director Sanjeev Singh. All right, that's a wrap on this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.